Hello everybody and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Tuesday the 17th of March. We have got a fairly mixed outlook actually forming today. It looked initially as though there was some sort of recovery that was starting to be put together after a mammoth sell-off in Wall Street overnight. 12% down on the S&P 500, 13% down on the Dow, 3,000 ticks down pretty much there or thereabouts into the close. An enormous sell-off, huge waves of selling pressure through Wall Street. It looked initially overnight as though that we were starting to pick up actually. S&P 500 futures, when the Europeans came in, were around about 4% higher. Actually went lower. A complete unwind of that, and you can see this still sort of moving around sort of around the flat point. And initially European equities were higher into today's session, but they've actually come off again. So still some real uncertainty surrounding this. And you've got this this condition where, as equities fall away, the problem is that you have these margin call related selling pressure through the likes of gold and silver, both of which are again sharply lower. Still no let up in the selling pressure in those markets. Interesting though that treasury yields have ticked a little bit higher today, up to 80 basis points there on the 10-year yield, as that market does show a little bit of signs of stabilization, certainly after yesterday's significant decline back. We've seen a bit of a rebound today, but still the selling pressure comes through, and still the volatility remains high. The VIX is still in the 80s, wow, from yesterday's move, and no real signal yet that the markets are happy to start to buy into these into any weakness and continue to go into some sort of recovery. But you've got the dollar, which had a bit of a corrective move yesterday on all those central bank moves to try and curb the strength of the dollar through the swaps market, where swaps rates had sort of expanded enormously. The central bank coordination there has sort of pulled the dollar back a little bit, but regaining a little bit of strength once more today. But really strong moves we can still see through these markets. Oil price initially rebounding, just slipping back again on the WTI. Still no real sign of recovery there either. So yeah, we're still some way off from thinking that these markets have bottomed quite yet. So in terms of where we're looking at on data points, we're sort of focusing on US retail sales today. But before that, you've got some European data, and the UK employment data has come out, and it's pretty positive actually for January. But I mean, markets are not focusing on that in any way at all. But still, the data has been pretty positive. Earnings holding up above 3%. Unemployment sticking there or thereabouts. Actually, a decent growth in employment change as well. So yeah, these numbers are looking okay, but obviously the markets are looking far elsewhere. And look at that, ZEW minus 49 for the German ZEW. Just enormous selling pressure. Have I got the ZEW? I thought I had it set up. It will be there. And there. No, that's the EFO. Sorry. German ZEW. Right. Wow. Okay, so we are back to levels not seen since, annoyingly got to reshape that, since 2012 on that ZEW. So an enormous decline in German industry. So yeah, we're still seeing issues there, and that's likely to continue, isn't it? Into the afternoon, we've got the US retail sales data, plus 0.2% on the month of February for ex-autos sales, and then a little bit later we've got the industrial production numbers, plus 0.4% for Feb on industrial production. So not horrendous numbers there. You're likely to see March where the numbers really start to tail off. And so we're still holding up there. And also jobs openings for January on the JOLTS, 647, up from 642. So these numbers in the US for February should still be holding up okay. It'll be March that you start to really see the data for March, really where that those numbers start to come off quite decisively. Okay, so on to my chart of the day, which is DAX. Now, I had looked at the DAX initially this morning and thinking, well, we've got a little rebound potential, and you can see here on the hourly chart, initially we opened higher, but we've fallen away quite sharply since then. You can see here on the daily chart where we have actually now filled that gap, that downside gap from 9065 from Friday's low. We've now actually filled that move. Yeah, filling a gap's never all that great. If you close a gap, which would be a closing level above that gap, then that starts to show the potential for recovery. But it certainly suggests that at the moment there is little real appetite to buy or sustain any buying pressure. And again, once more today, the initial opening move higher, straight back into selling mode again. Now we've seen the momentum indicators just desperately negative. I mean, you'd say oversold at night. We're back in the nines on the RSI, so enormous selling that we've seen obviously through the DAX, and that goes without saying considering where we've come from to where we are now, just over 30 odd percent down. So yeah, it just continues to fall away, and no real sign on the daily indicators that anything's happening there. Little bit, you could argue, little bit of a positive divergence on the hourly RSI, but nothing really that you'd go on. And I think unless you get the hourly RSI above in the 50 area, which is something you've not really seen, I suppose 55 on the 3rd of March, that's what, 2 weeks ago. Not really seen any sort of decisive recovery, even remotely building yet on the DAX. So above 50 might start to signal little inklings of recovery, but for now we're still selling into strength. And that reaction low, of 8255, looks likely to be retested in due course. Crazy times we live in. Anyway, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.